Let's get in Mr. Ajay Bagga on this conversation. And Mr. Bagga, thanks so much for joining in. Good morning. You track this very closely and you track the intersection of geopolitics and markets too. Do you reckon, one would reckon that the markets have been concerned about no trade deal between India and the US. The question only is, if it doesn't go through within this August deadline, is that a negative or have the markets already priced that in?
Neeraj, two things. I think it doesn't go through before August 1. That's more or less now settled. You won't see anything happen. What Rishabh laid out, the three scenarios. Does India get a letter on August 1st of 15% overall tariffs? We don't know. Or does the deadline get pushed? A lot will not depend on what happens on US-China today. We are not hyphenating India and China. The trade relation is much bigger. And that's why their Treasury Secretary is sitting in Stockholm with the Vice Premier of China. But what we are expecting today, clarity on postponement with China. South China Morning Post on Sunday brought out an edit that 90 days postponement is happening. If that comes through, that will be a relief. Second, what happens on the Iranian and Russian oil, the secondary tariffs that Trump is talking about. Again, yesterday in Scotland, while meeting the press along with the British Prime Minister, he mentioned that Putin is not reacting to my 50-day deadline. Maybe I'll push it up. So those secondary tariffs is what is roiling the oil market. We saw the oil market react upwards. And if the Russian oil is taken out of the equation, out of 103 million barrels a day, if 9 or 10 million barrels go out, the oil price can be going anywhere. So that's extremely disruptive for the global economy and especially for India. I think those two clarities we'll be seeking today post the US-China. With India, we are not expecting much. Mid-August, the US delegation comes in. Trump is supposed to visit India on the back of the Quad meeting in September. So like in China, he wants to announce a big, beautiful trade deal with China in a personal meeting with Xi Jinping. I think he will hold it for his visit to India to come and talk about a great deal between the two biggest democracies. So I would suspect that it goes to September with August 1st deadline getting extended either a month or by 2 months for India.
Ajay, hi, morning. I'm just wondering whether or not there is any implication for the market or in fact for trade balances if this deal does not go through, because the way that I see it, and the only reason I'm bringing this up is because you talked about China. The trade that takes place between the two and the imbalance there is dramatically higher than between India and the US. And while we're anticipating that trade will go up down the line, it's not something that immediately affects anything. Would you agree, or would you say that it's imperative for us to sign this deal sooner rather than later?
Yeah, I would say the latter. I don't think it's very imperative. The markets have discounted it to a large extent. You saw the reaction to the Japanese deal. It was a 2-day reaction and then again back to earnings and fundamentals. You saw the European reaction. European futures on Monday morning Asian trading were up more than 1%, but the European markets ended down. Because as they're looking into the fine print, these are one-sided deals. Like Europe is giving 15% tariffs, but it's opening its markets to a large slew of American exports into Europe at 0%. Plus, they have to pay. They have to buy $750 billion of US energy, which I suspect they might already be buying. It is just getting added. But the 600 billion more of investments and the defense procurements, that all adds up. So you had the Dutch finance minister coming out in opposition, the French calling it a bad deal. So it is 27 European nations which have to now pass this trade deal. Nobody has seen the actual deal document, so we don't know what all is excluded. We are just conjecturing based on, and again, the European Commission had said something, Trump said something. So we don't really know exactly what the deal contours are. For India, I think we are very low in the priority list. For him, it's more China, Canada, Mexico that
Mr. Bagga, agreed. For him, it might be low priority list. My question is, if 15 to 20% is the base rate, which is what Trump has now indicated, and 15% is where he seems to have settled with everyone else, what does that mean for India? Because our tariffs on any American imports, which we might also have to increase as part of the deal, go up significantly, doesn't it?
Yeah, there is a 10% with UK, for example. So India is more positioning itself on the UK deal rather than the 15%. So there is hope, but I would say realistically it will be difficult. Definitely not August 1st, definitely not mid-August. There are too many factors which are stumbling blocks. For India opening, there'll be a quota system. So you will say X thousand cars you can bring in at 10% and Y thousand bushels of almonds and this and that. So it will be more a quota. Making streamlining each other's quality controls will take time, so it will be more directional there. That's where we are stuck. So India is ready with a deal of again, this is media based. I don't have any insider information, but 40 tariff lines India is ready to sign today. But Trump is saying all or nothing. He's saying at least 70 tariff lines, and which is going to take a much longer time. So even when we signed, say, the FTA with the ASEAN countries in 2009, it's taken us 15 years, and still we have opened 70 tariff lines. They have opened 47. So these kind of things take multiple years. It doesn't happen overnight. And when the bureaucrats sit, they find a lot of stumbling blocks. So it's not easy, but it will be a relief for the markets if it comes in. But mostly it's not coming in till September.
So relief if it comes in, no big hit if it doesn't, is where it kind of stands. Thank you so much, Mr. Bagga, for joining in today.